Wow! Carvana just dropped some absolutely massive numbers for their latest quarter. We're talking record-breaking stuff here. So in this explainer, we're going to dive right into the CFO's report, pull out the key insights from Mark Jenkins, and really figure out how'd they pull this off, and what does it all mean for what's coming next.
All right, here's our game plan. We'll kick things off with those huge, record-breaking numbers. Then we'll see what's really driving all that growth. After that, we're decoding the profit margins, taking a look at how they're spending their money, and finally, we'll wrap up with a peek at what's on the horizon for Carvana.
Okay, first up, let's just zoom out and look at the big picture. Because, Carvana's Q3 wasn't just good. The numbers are telling us it was frankly a historic quarter for the company. Right out of the gate, the CFO, Mark Jenkins, didn't beat around the bush. He just came out and said it. The third quarter was another very strong quarter. He really set the tone right there, framing this as a huge win from the very beginning.
And look, this wasn't just talk. He had the numbers to back it up. Carvana didn't just squeak by. They absolutely smashed it, setting new company records pretty much everywhere you look. We're talking retail units sold, total revenue, adjusted EBITDA, and GAAP operating income. It was a clean sweep.
So what does all that success actually look like in terms of scale? Well, check this out. For the very first time, they've crossed a $20 billion annual revenue run rate. Now, what does that mean? Basically, if they keep up this quarter's pace for a whole year, that's the kind of money they'd bring in. It's just a massive, massive milestone for them. So the big question is, how? How did they pull off these incredible numbers? Well, let's pop the hood and look at the growth engine. It all starts with just a huge explosion in sales. At the end of the day, their business is all about selling cars, right? And they sold a ton of them. In Q3, they moved almost 156,000 retail units. And yep, you guessed it, that's another new company record. But it's not just the number of cars, it's the speed of the growth that's really eye-popping. A 44% jump in cars sold compared to this time last year? That is some serious acceleration. It tells you they're just gobbling up market share right now.
And all those cars sold, well, they add up. That translated into a staggering $5.6 billion in revenue just for the quarter. That's up 55% from last year. And you know what's interesting? That growth is actually faster than their unit growth. So what does that tell us? It means the average price they're getting for each car is going up too.
Okay, but massive growth is only half the story. Any business owner knows that. The real question is, are they making money? That's where things get super interesting. And for Carvana, it all comes down to a little acronym, GPU.
So before we get any deeper, let's make sure we're on the same page with GPU. It stands for gross profit per unit. Just think of it like this. It's the pure profit Carvana makes from selling one car. Before you factor in all the big overhead stuff like marketing or corporate salaries, it's a super important number for understanding how healthy the actual car selling part of their business is. Okay, now this is where the story has a really interesting twist. If you look at the direct profit they make from just selling cars, both retail and wholesale, it actually went down a little bit. And that's mostly because of vehicle depreciation happening across the whole market. But, and this is a big but, look at that other GPU line. That one went up, and that's where things like financing and service contracts live. That part of the business is getting much more profitable. And that strength in financing, it is absolutely not an accident. The CFO dropped a pretty big bombshell. They've locked in agreements for up to $14 billion in future loan sales. I mean, that's more than just a number on a page. It's a massive vote of confidence from their big financial partners, basically saying, yeah, we trust what you're doing. All right, so they're making a lot of money. But as we all know, it's not just what you make, it's what you keep. So let's talk about how they're spending that money and how they're building a stronger financial foundation for the future. This right here is a perfect picture of something called operating leverage. It's a really powerful idea. Think about it. While they sold 44% more cars, the cost to sell each one of those cars, for things like marketing and admin stuff, actually went down by over $300. That's the dream for a growing company. The bigger you get, the more efficient you become. It's a classic sign that their business model is really starting to work at scale. And it's not just about being efficient day to day. They've also been doing some serious financial housekeeping. The CFO laid out exactly how they've been chipping away at their corporate debt, systematically paying it down. We're talking a total of $1.2 billion in debt reduction in just 2 years. That's a huge deal. It just makes the whole company financially healthier and a lot less risky. So, you take all of this together, right? The record-breaking growth, the fact that they're getting way more efficient,
and they're paying down their debt. It all led the CFO to make a pretty bold statement. He said this is their strongest financial position ever. That's a powerful claim.
Okay, so after a quarter that incredible, everyone's asking the same thing. Now what? Can they keep it up? Well, lucky for us, the CFO gave us a pretty clear look at what to expect for the rest of the year.
And here's the official word. They're not planning on slowing down. They expect to sell over 150,000 cars again in the fourth quarter. And when it comes to full-year profit, they're feeling so good, they think they'll hit or even beat the very top end of their target range. That's some serious confidence right there.
So, to wrap it all up, the big takeaway here is confidence. The message coming from the CFO is clear. They plan to ride this huge wave of momentum right to the end of the year. And this strong finish is all about setting themselves up for their even bigger, long-term goals.
And that leaves us with one final big question to chew on. We've seen the absolutely stellar results, we've seen them get more efficient, and we've seen them strengthen their finances. So you have to wonder, are we watching Carvana make that leap? Are they transforming from the scrappy disruptor that was just shaking things up into a true industry leader that's now starting to write the new rules of the game?